Good morning, everybody. It is Tuesday, July 2nd, 8:44 a.m. I know a lot of you are probably surprised, probably not making sense, probably thought you had a minute to go get something from the garage because you knew Amit wasn't going to be on time. You knew he would probably be, at closer to 8:45 or 8:47. But no, it's a new month, new beginnings. We're waking up early. We're being healthy. We're going to the gym. And so we're starting the stream not only on time, 30 seconds before. Everyone's so shocked in the chat. And hopefully we stay consistent with this. Tomorrow I'll be back at 8:49 and I'll have all the comments go against me. But we're here today. Thank everybody for being here. Today's going to be a very important day in the broader global capital equity markets because of two things. Number one, Tesla is going to be reporting their delivery numbers in about 10 minutes. We should be getting their delivery numbers. So going to be really exciting to see what those end up being. I want to start off the show discussing what has happened with Tesla over the past 24 hours and how these numbers are ultimately going to affect the company. So that's one thing I'll be refreshing my side of the screen. It usually comes out between 8:45, which is right now at 9:15. So, we should see it pretty soon, but we don't have it yet. That'll have an impact on the stock. And number two is Jay Powell at 9:30 is going to be speaking. And he's going to be speaking in a panel with a bunch of other Fed chairs from Europe and Canada. So that'll be really interesting. The stock market is red right now in the pre-markets, if you hadn't got a chance to look. And I think one of the reasons the market is red, Bitcoin up a little bit right now. Tesla down almost 2% at 205. If you sold those covered calls at 220, based on the delivery numbers, you might have made a crap ton of money on those covered calls expiring this week. People were willing to pay like $200 for covered calls for 220 strike this Friday. Or, we might go up to 220 if the delivery numbers are amazing. So we'll see what happens when we get those numbers. But markets are red in the pre-market. And I think that's because you can see S&P 500 right here, 542.99. I think everyone's afraid of what Jay Powell's going to say. Various Fed officials have been rather hawkish over the past couple of weeks. A lot of them have also been dovish. So there's sort of a wash of good and bad here. But if Jay Powell ends up being a little bit too hawkish, then maybe we will see the markets have some weakness. One of the reasons why he could be hawkish is because Canada cut their rates a month ago and they just had their inflation come in higher than expected in the latest read, I think like 5 days ago, which is not good because you don't want to see inflation spike up right after you cut rates. You kind of want to show that doesn't happen. Now, the Euro area inflation slowed to 2.5%. Before briefly accelerating to 2.6% in May. So it came down 0.1% in June. So that was a good thing to see. But Canada's did go up a little bit. So I don't know. We're going to see how Jay Powell kind of reacts to this. Another piece of inflation news that is just not good is oil prices. Oil prices are back up to $84. We were under 80 for the majority of the month of May. And we've been above, June. And now we've been above 80 for kind of the end of June, like last week of June, and then beginning of July. So this number right here is something to keep your eyes on. If that is a little too aggressive, we get back to 90, energy might inflate the CPI, given that's a big part of the index going into the next read. So we'll see what happens. But the Tesla numbers are the big things that we have to look forward to. Bhaskar, what's up? Nolan, Secco, Sundown Sam, Garcia, I'm Beneficial, Carblind Collector, June. Hope you had a good birthday yesterday. Gene, what's up? What's up? Benny, everyone's so surprised. Why is it early? Because it's July and we're starting a new month and we are starting new beginnings, which includes being early. Blake says, do you regret not buying more Tesla under 200? So, yes, but the thing about that is I didn't have money. A lot of my money is, I haven't done a portfolio reveal in a long time. And when I do it, you guys will realize why I haven't been buying like anything. A lot of my money is allocated. And the two companies that are allocated is in Palantir and Robinhood. And obviously Robinhood has done very well. Palantir, it's done well this year, but I didn't have options on Palantir. I had options on Robinhood. So even if I wanted to acquire Tesla, I don't have cash, dude. Like I don't have there's no, I did like a meaningful position, 100 shares, 200 shares. I would not have had the cash to buy. So could I have bought like 5, 10 shares? Sure. But like, that's not really a position at that point. So I think everyone has regrets of not buying more Tesla under 200. Maybe we'll get an opportunity again. But even if Tesla went to 170 today, I could not buy 100 shares. I don't have the liquid cash to buy 100 shares of Tesla at $100 unless I, do margin in. I'm not going to pay to buy Tesla. So my portfolio has really been a bet, and you guys will see it at the end of the year if it works or not. My portfolio has been a bet on Palantir, obviously, which has been the staple of the portfolio for a while, and then options on a company that we were able to get options on at very cheap. And if it does what it needs to do, then that changes the course of the portfolio for the next, I mean, the rest of my life, really, if that actually takes off. So, and it does, and it's close. So, and the company has fucking been executing. And so it's one of those bets where it's like, I went heavy, I went big, I went heavy for what my portfolio is. And if it works out, then we get to really have fun next year in terms of allocating capital. So we'll see what happens, but by the end of the year, we'll know. And if it really does happen, you see that whiskey in the back that I got from the Robinhood Gold event? I'm going to finish that fucking bottle live, dude. If this works out, I am finishing that bottle live. And we'll see what happens. All right, so Tesla China delivery numbers are out. Yeah, we got those numbers this morning, but we didn't get the actual numbers yet. The Tesla China delivery numbers were not bad. We got 71,000. Well, actually, no, they were kind of bad. they were not the best. Down 24% year over year. Tesla China 71,000. The CPCA unveiled on Tuesday that Tesla delivered 71,000 vehicles in June, down 24% on a yearly basis. In the first half of the year, Tesla China sold 426,000 vehicles. So if Tesla China is down 24%, the question then becomes, what are the overall numbers going to be like in regards to Tesla? And let's do a little bit of calculations on that as well to kind of see what that looks like. It's tequila, dude. It's not tequila. You guys might be tequila, dude. It looked like whiskey to me. Oh boy, I get everything wrong when it comes to this stuff. Okay. Oh, by the way, Kathy bought 199,000 shares of Palantir yesterday. So shout out to our girl Kathy. She finally made a big boy purchase in a very long time. She was buying like 5,000, 7,000 here and there. She bought 200,000 shares. What was it going to show about Tesla? Okay, yes. So my question is, if we get to 410 or 415,000, does the stock suffer from a 6% gain? So we saw China was down 24% year over year. That means Europe, North America, and Asia have to pull up the numbers. And I don't know if they're going to pull up the numbers that aggressively. I do think the 6% move yesterday wasn't random. Now, I could be wrong, but when Tesla was at 209, almost 213 yesterday, I don't felt like that was retail just aping into the stock. I felt like that was like, oh my God, like we had like big money is realizing that Tesla is going to start becoming very, that the numbers aren't going to be as bad as what we thought. The FSD is probably going to get into motion, and that, hey, it's time to buy Tesla. It's July 1st. We need to rotate our profits from NVIDIA and Google and put it into Tesla. Now, I could be wrong, but I do think that move was calculated. The question is, consensus Bloomberg is saying 440,000. If we come in at 410, is that bad? If we come in below 410, is that bad? If we come in at 445, does the stock go to 230? Like, I think we're going to have to see as those numbers play out in the next couple of minutes, basically, what it turns out to be. I think my prediction is 420-ish, 410 to 420, if I could have a range. I think that's reasonable, and I don't think the stock sells off on that news. If we come in below 410, like remember last quarter we came in at 386, that was not good. I mean, Tesla has not delivered under 400,000 since April of 2022. So that 386 number was just disgusting, and it showed the street there was a demand problem. And then on the earnings call, Elon said, no, we do have a demand problem, and hybrids are taking off. So that's why the pivot to FSD and selling rides and robo-taxis I thought made sense, even though Reuters thought it was like the end of Tesla. Or at least that's how they framed it. To Elon, it was just like, well, this is kind of what we have to do. And that's ended up what they started to do. Benny says, I'm going 407K. Okay, put in the chat your exact number, and whoever gets it right, I will give a $25 Amazon gift card to. We'll do that giveaway. So put in the chat your exact number, and if you get the exact number right, just like screenshot your answer in the chat and then send it on Twitter, and we'll see if we can give the gift card to. It's also going to be whoever sent it first. So if two people get it right, I'm just going to confirm in the chat. So if it's 400K, Delu said 400K first. So you know why I messed up last time when giving out the giveaway? It's because StreamYard is slower than your YouTube and like my YouTube than the YouTube app. And so that's why I messed up, because someone was ahead of someone else, but like on StreamYard, it updated slower. So unfortunately, that was the reason. But we ended up giving those three people that won the Palantir $50 voucher. They all got it. And so all three of them, I think they ordered a hat. So shout out to them. All three of you guys got the Palantir voucher. Also, from my source, Palantir is coming up with a lot more merch not just hats. My source is Iliano, by the way, who runs the fucking merch store. They're going to be coming out with like some streetwear type. It's like some Supreme type. Like the shit is going to look like cool, bro. Like it's going to look like shit you would actually wear like at a party, not just like a cap. So it's going to be pretty cool. Okay, Tesla numbers not out yet. We should be getting them in about 10 minutes, and we'll see what happens. We're guessing delivery numbers, Wong. We are guessing delivery numbers for Tesla. Whoever gets it right, we'll do the $25 Amazon gift card too. So we're guessing delivery numbers. I think 410 to 420. If I had to put an exact number, I'm going 415.75. 415.75. 415,075 vehicles for Tesla. And let's see how it ends up playing out a little bit later today. Well, literally in 10 minutes. Also, J Powell at 9:30. We're going to have to talk to J Powell at 9:30. Not talk to J Powell. We're going to have to watch him talk at 9. Like, I would love to talk to J Powell. So at 9:30, I'm going to ring the bell and I'm going to try to look at a couple stocks, but we're going to have to immediately go to J Powell because he's going to be speaking. And honestly, looking at stocks is irrelevant because whatever he says is going to affect stocks. So that'll be, I think that's like a 30-minute press conference panel thing that he's doing. And so we'll see what he says. Okay, most of you are saying it's above 400. Most of you are thinking it's above 400. Wow, Rack City's at 520. Dude, if they put up 520, oh my God. And remember the math here. We did the math a long time ago. The math is Tesla needs to do 531,000 vehicles a quarter, given their crappy quarter in Q1, to CAGR at a 10% growth rate, right? Because they did 387 in Q1. So the question is, do you really think they could do last year they did 38% year over year on deliveries. This year they're going to do less than 10 unless Q3 and Q4 blows it out the water. So I don't know. But granted, the street has already punished them. That's the thing. Like the stock fell to 130, and if you bought it, or 138, if you bought it 138, you're up 50%. So it's not like they didn't get punished for these bad numbers. They got punished. It's just Elon did what Elon does, and he convinced everyone to buy into another vision. Someone commented on Twitter last night. They were like, Amit, shouldn't we be looking at PE ratios and multiples? Like, why are we betting on this like dream of robo-taxis? And I was like, dude, if you can sell a dream, I mean, Tesla was a dream at one point. EVs were a dream. Elon sold the dream. He got funding. He won. And now Tesla is what it is. I wouldn't go against him to think he could sell the dream of FSD and actually execute on it. Also, a lot of you guys probably missed the market close yesterday. No numbers yet on deliveries. I'm refreshing the screen, but no numbers yet on deliveries. Elon followed Travis Kalanick, the CEO of Uber, which was very interesting, dude, because FSD theoretically, and I don't think this will happen, but I mean, a lot of the Tesla bulls believe it's replacing Uber. So why are you following the former CEO of Uber? Real quick, before I pull that up, here's Charles Liang, the CEO of SMCI, with Elon in their data center for XAI. So two CEOs of multi-billion-dollar companies, for Elon, $100 billion company, working together. He says, thanks for Elon for providing the liquid cooling technology to large AI data centers. This may lead to preserving 20 billion trees for our planets. And SMCI and Dell are contracted to do the AI data center infrastructure build out for Elon Musk and XAI. So excited to see him work with SMCI as well. Now here's the Elon tweet or Elon Travis thing. Let's see if I can pull that up. But that is really, I mean, again, him following Travis to me was interesting. It was very interesting. And I think, yeah, right here, Elon is now following Travis. I don't know. I think it says something about potentially bringing him on as a consultant to try to work and build out, what Tesla's trying to do with replacing Uber. And again, I don't think they're going to replace Uber overnight. I think that's like wishful thinking, but I do think if you had to pick between Uber and a self-driving car after the self-driving car is proved, which I think would take a year or two of being like way better, and you have all your privacy in that car, and you don't have to talk to some driver that wants to tell you their life story. And I actually enjoy doing that. You guys know how much of a talker I am. I enjoy doing that. But but still, sometimes it's annoying. I think most people will pick the robotaxi. The question is just, how that would happen and how quick Tesla would be able to get that out into the world. Tesla stock down 1.72%. We still don't have the numbers. It should be out maybe at 9 a.m. exactly. We'll see. But once it comes out, I will show. If I was an Uber driver, I probably would be that talkative dude. Like if someone asks me a question, then I would get into the. If they don't ask me a question, I would just drive. But if you ask me a question, I mean, then you would give me the green light to like start talking. And if you give me the green light to start talking, I am a good listener. I am a very good listener, dude. Like I listen. I think that's why girls like me, because I listen. Like no one fucking listens to girls. And like when I'm like, I actually listen, and I listen so much I can ask really good questions. But then when they let me talk, then it's like, then it's all over. Then I'm gonna start talking. Uber as the network, Tesla's the technology. They will just merge or help each other out. I don't know, dude. This whole thesis on Tesla buying Uber and whatever, or merging, I don't know. I don't know if Uber even wants to do that. Now, maybe they're forced to do that, but I don't think they want to do that. I think Tesla would rather just beat them. But yeah, Uber does have all the technology. And, the thing is, Uber's worth a ton of money. Uber's worth, what's the market cap? Uber. Oh, Tesla's up. What is going on? What is it? Tesla up 1.5%, 212. All right. Where are the numbers? Let me see if I can get them. The numbers. We need the numbers. Where are the numbers? Oh my God. No one has the numbers? Where the fuck is the numbers? Where's the number? We got a green candle. Hold on. Let me go to the 1 minute on the Weeble. 1 minute. Okay, there you go. There's the green candle. It hit 214. Wow. It hit yesterday. It beat yesterday's high. Where are the numbers? Let's see. Someone knows if the numbers are out, even if retail doesn't know. Bloomberg would know. Oh, wow. Yeah, no one knows. So the terminal knows, but no one else knows. Oh, now it's going down. Well, it's holding on. The good thing is, hopefully, it's not going to fall below 200 if it's keeping the green candle right there. 211. It's fighting for its life right now. So I don't think the numbers can be that good, because there are definitely people selling, or maybe people's like limit orders or limit sells are being filled. No one has the numbers yet. No one has them. No one on Twitter has them. No one has them. If anyone has them, let me know in the chat. Is that Tesla's produced 410,831 vehicles and delivered 443,000 in Q2. I think that's right. I think that is correct. I think that is right. Let me just confirm. I'm pretty sure that you're right on that. That seems like the numbers I'm getting. Meet Kevin has them 443. 443. Okay, you're right. Yeah. 443, 956. But is that the deliveries? I believe that's the, holy crap. I think that's the deliveries. It looks like that's the deliveries, bro. Oh my goodness. If that's the deliveries, that is definitely above expectations and definitely above the most bearish expectations. Yeah, I think you're right. And that's why we're getting the green candle. 443. The 0.99 APR definitely helped Tesla. It definitely helped Tesla. Correct. That's a great point. Wow. Look at that green candle. Look at that. It looks like it'll crack 215, up 2.5%. 443. I'm trying to pull up the official report on Tesla's website. They don't even have it on the website. So Meet Kevin probably has the Bloomberg. Oh, no, here it is. I got it. 411,000 vehicles, 444,000 delivered. Wow. Holy guacamole. Look at that. That is a hell. That's why the stock went up yesterday, dude. That is the only reason that someone knew that number. There were people thinking it would come in at like 405, for the deliveries, not just production. So if that's the number, oh my. That is big, dude. Shout out if you own Tesla. Congrats. If you sold covered calls yesterday, hopefully, wow, it's at 216. Oh my God, it's green. It is so good. Look at dude, Tesla has not seen this green in so long. It's like not every company, but a lot of big names have had this level of green this year. Tesla has not seen 2 days of just green candles. Wow. Okay, so I'm just going to tweet this right now. So Tesla deliveries produced 410,831 cars, delivered 443,000 cars. There you go. Let's go to CNBC. Let's see what they have to say about this one. That's big, dude. That is big. Oh, wow. It's going even. 217. It's up 3.4%. Okay, your 220 covered calls. You're underwater, right? Well, you're not underwater, but well, technically you might be under. We'll see when it opens up, but it's definitely going to be under some pressure unless this gets sold off. I don't know if this is a sell the news, dude. I don't know if this is a sell. I think institutions might be like, wait a second, FSD's real and these mother effers are selling cars, like, and they're actually selling vehicles, even though it's been like an EV winter. I mean, yeah, earnings are probably going to be better than expected as well on this. It doesn't seem like earnings are necessarily gonna suck on this. CNBC is not covering it yet. They're probably gonna cover Tesla in a second. And then we'll have J-Pow at 9:30. We'll have J-Pow at 9:30. Wow. Yeah, Dan Ives did call this, dude. I mean, Dan Ives did say Tesla's gonna. He did say they're undervalued, and I don't know if he knew the numbers were gonna be this good, but there you go. That is incredible. That is not bad. Okay, where is the stock right now? Stock's up 4% on this. Wow. Okay, so I think this was ahead of expectations as well. The street was, this was ahead. The street wanted 439, ahead of expectations of, the street thought they would do about 440,000 cars. There you go. Okay, so that's what we have on Tesla delivery. So produced 410,000 cars, delivered 443,000, ahead of expectations of 440. Stock is up 4%. There you go. It just continues. Wow, 219. Rest in peace to the 220 covered call, at least for now. Dude, it's just like not stopping. People are getting in. People are putting this in. It's not stopping. Yeah, it's not stopping. Did they say anything else on the press release? No, they're going to have earnings on July 23rd. So we have July 23rd earnings now. People thought it was July 17th. It's actually July 23rd. I'll be live for that. And it looks like earnings are not going to go that bad. So what happened here was likely the 0% financing, which was very important. And on top of the 0% financing, it was maybe just like a seasonal downside that they had in Q1 that didn't exist in Q2. And that could be for a variety of external reasons. But even though China and Europe sucked this quarter, China was down 24%. Europe was down, I think, 35% in the month of May. North America and Asian parts of the world kicked in, like Japan, South Korea, etc. Look at that. That red candle died from that red candle went down to 218. Now we're back at like 218.9. That red candle didn't have a chance. That red candle immediately, the green one just took it right back up. Wow. Mila says I should have done Tesla instead of Micron. Where's Micron right now? Micron. Damn, Micron's at 129. Damn, I thought that one would have recovered a little bit by now. Yeah, I think Micron will be fine. I think 180 is still the price target, even if it takes like a year, but I don't think Micron's going anywhere. But Tesla was Tesla was down. Now Tesla stock is not down 16% year to date. Tesla stock, I think, is down 10% at max. Tesla year to date, yeah, it's down 10% year to date, about 11% year to date. So it's slowly recovering from all the red. And if you've been DCAing all down, to fucking 138, you are up, or at least your DCA is not doing that bad. Can we take in the fact that they delivered more cars than they produced? Yeah, that is also incredible. That means there was demand. That means there was real demand, dude. If they actually were able to deliver 30,000 more than what they produced, that is not bad at all. Energy is growing fast. Yeah, they also noted on the press release that they deployed 9.4 gigawatts of energy storage products in Q2, the highest quarterly deployment yet. Wow. Energy's not stopping either. I mean, you got to give your hats off to Tesla on this one. You got to give your hats off on Tesla. They really came in and they proved that they're not messing around. Now, the 10-year, while this news comes out, the 10-year, unfortunately, I think is down a little bit. Yeah, it's down a little bit, but it was up yesterday at 4.4. So that is also putting some pressure on U.S. equities because that 10-year continues to struggle a little bit. But at least on Tesla, it's not seeing that pressure because these results were just so phenomenal that it was able to do what it had to do. Well, there you go. That's what we got on Tesla. We got 20 minutes until the market opens. Yeah, Tesla right here, 219.92. It's 5 cents away from 220. It is 5 cents away. There you go. It hit 220. There you go. That red candle again. Look at that dip. It was eaten up in like quickly, dude. It went to 206 in the pre-market, went all the way up, had a little bit of red at 218, and now it looks like it wants to crush 220, up almost 5%. That means Tesla's up 11%. Tesla's added $65 billion of market cap in less than 48 hours. The narrative on a stock can change so quick. It kind of reminds me of Apple, doesn't it? Apple was stuck at 170 for so long, and Apple jumped up to 216. Tesla was stuck at 160-ish, you could say, for very long, and then now jumping up into that 220 range. TSLL must be up as well. TSLL, that's a proxy on Tesla. Yep, that's up 9%. There you go. I mean, this was stuck at $7 for the longest this year. That one's at $11.25 right now, so that's up. Someone said PayPal's up 15%. Why do you have to do this, dude? Why do you have to be like this? Like, you don't have to be like this, dude. Like, it's okay. Like, we can just have fun with Tesla. We don't have to worry about fucking PayPal. Oh, by the way, if you care about Palantir, which I would imagine some of you do, on Twitter, we're going to have spaces tonight with a lot of people in the community. So me, Garcia's going to be there, Matt, Crossroads, Grogu, Go Carp, who's also known as Adam. You guys know him on the channel. He talks a lot about the government stuff. We might have some Palantir employees join at 9:30 p.m. Eastern. We're going to have a big ass Twitter spaces about Palantir. And we're basically going to be discussing all the new deals they got. This sort of ontology versus chips argument that Carp's been trying to make, a big argument around. And so a lot of stuff, 9:30 p.m. on Twitter. Twitter's in the description. We'll be discussing all Palantir. I'll probably just like strip the audio and put it on YouTube later, but that'll be here tonight. SoFi is red or basically flat in the pre-market. Taiwan Semi down a little bit. SoundHound down. Alibaba is up a little bit, 0.30. Ginkgo Bioworks up 0.56%. Carvana down 0.61. McDonald's down 0.2. JP Morgan up 0.2. Palantir in the pre-market is down 25.70. Robinhood pre-market 22.72. S&P is still down a little bit. All the Max 7 also are down besides Tesla. Yeah, I mean, Amazon's up a little bit. Nvidia's down, 2%. Meta's down, Google's down, Microsoft's down, Apple's down. And then Tesla's the one that's still up 4.5% on the day. Not bad. Not bad at all for Tesla. Will Robotaxi event be buy the rumor, sell the news? If you had to ask me, I would say yes, because that's how it always goes for Tesla on these events. But maybe it's different. Maybe it's different this time. Maybe because the stock is down so much year to date and it has the momentum and the tailwinds behind them and earnings are going to be okay given these delivery numbers. Maybe that event is a catalyst and the street actually buys it up because they see the event as a good thing, not as a sell the news thing.
Delivery numbers for Tesla, and these are better than expected. Remember, the street was expecting about 436,000 vehicles delivered worldwide in the second quarter. Tesla delivering 443,956 vehicles in the second quarter. 95% of them, as it usually is, Model 3 and Model Y. And so this is much better than was expected. Production coming in at 411,000 vehicles. 410,831 to be exact. So again, the reason you're seeing shares move higher, this is a better than expected number for the second quarter. Earlier today, we got Tesla's China numbers, and that had a few people a little bit nervous. Remember, China is the world's largest EV market, and therefore you want to watch it closely because it's such a big part of Tesla's overall sales around the world. In June, sales totaled 71,007 vehicles, down 24% year over year. For the second quarter, Tesla is in China, a little over 200,000 vehicles delivered. And I want to show you where Tesla is relative to BYD, because BYD's Q1 sales of electric vehicles, we're not talking hybrids, pure electric vehicles, so you can compare those with Tesla. They came in at 426,000 vehicles. So Tesla still remains number one worldwide. And there you see VW, GM, and Geely as well. And in terms of annual sales, I'll be curious what this does to the estimate of what analysts are expecting for the full year. Right now, it's come down to 1.82 million vehicles expected to be delivered this year by Tesla. For a point of reference, it was 1.81 million last year. So essentially flat. Do analysts now say, okay, maybe we're starting to see some momentum here. Maybe we raise the full year delivery estimate. Now, as you take a look at shares of Tesla, a couple of important dates to keep in mind. July 23rd, after the bell, that's when we will get the Q2 results, and we'll see what kind of impact pricing in China has had on those Q2 results. And then on August 8th, this is the one that so many are focused on. This is when Elon Musk, he talks about the robotaxi. What's the plan? Do they show us a vehicle? Do they give us a timeline in terms of robotaxi being deployed? Geofenced areas all over the place. Tons of questions surrounding what they're going to say about the robotaxi. That comes up on August 8th. But again, guys, for Q2, better than expected deliveries from Tesla.
Just quickly, Phil, better than expected by 4,000 or so, and obviously still marks another quarter
8,000, yeah.
Sorry, 8,000. My maths is off, or our estimates on the bottom of the screen are off a little bit. But talk me through that outlook. Even with a better quarter, even with perhaps things improving a little bit in the second half of the year, yet we're still stepping back, talking about flat year over year. I mean, do people think that that's a temporary?
If we come in at 1.82, it would be flat year over year. That is correct.
Well, whether it's 1.83 or 4, or we're not talking about growth.
Roughly speaking.
Do people think that that's a 1 or 2 year issue, or are they just happy to price in the stock where it is and it being X growth?
Well, look, in terms of the stock, there's no way to tell exactly what the mindset is on the Tesla investor, because so many of them now are trying to pivot to other focuses or other focal points in terms of why they believe the stock is undervalued. Energy storage is a great example. As Tesla continues to rapidly increase its energy storage deployments, people are saying that's what you should be focused on, not on vehicles. But make no mistake, vehicle deliveries is still what people generally focus on when they're looking at Tesla. And Wilf, to get back to your question, yeah, it's going to be flat year over year. This is why Elon Musk is pivoting, as he mentioned at the end of Q1, to a lower priced model. Now, how much lower priced will it be than the current Model 3? That remains to be seen. What can they do? I mean, they made an announcement saying, by early next year, maybe even late this year, which nobody's really buying into, you will start to see us produce and roll out a lower priced model. Are you tweaking the Model 3? How much lower priced can you get? They know. Tesla knows. The world is focused on a lower priced vehicle. They are not focused on the Cybertruck. That is a niche vehicle. And that's the issue, is that Tesla spent so much time on the Cybertruck when so much focus should have been, many believe, on a lower priced vehicle being developed.
So there you go. Tesla, if you're just joining, has delivered 443,000 vehicles. The stock is ripping green, up 5.7% after being up 6.05% yesterday. 222. They delivered 30,000 more vehicles than they produced. And they were about 4,000 above street expectations at 439 versus at 444, which is what they delivered. I mean, you couldn't ask for a better report, dude. You just couldn't ask for a better report. I'm very curious from Elon's perspective, what created the uptick in demand. I mean, they did 387 last quarter. They did 444 this quarter. So that's up, almost 60,000 vehicles. There has to be some kind of argument there about what happened in these 3 months that created that much more demand. And quite frankly, it might be as simple as the 0.99% APR offering. A lot of people probably took advantage of that. That, I think, is a genius offer. I don't know why they didn't start doing that earlier. But instead of lowering the prices on the cars and hurting gross margins, you can just make the financing easier for people, especially in a high interest rate era that we're currently living through. So maybe that was it. But that is what allowed Tesla to get, hopefully, above expectations and hopefully continue to do this for the next 2 quarters. Because if they do this for the next 2 quarters, as Thomas said in the chat, the delta between the deliveries and the production is what should result in material free cash flow that is positive this quarter, and definitely much better than it was in Q1. Because since they actually are able to recognize more revenue because they delivered 30,000 more cars than they produced, that should put a meaningful bump in free cash flow, at least above expectations, even if it's not as good as it was last year this time. So year over year, it might be down, but quarter over quarter, sequentially, will be up, which is, I think, all the street's going to care about because they're looking forward to the future. 221 on Tesla. When the market opens, we'll see if there's any red candle here and if people want to use this price as exit liquidity. But I don't know. I mean, the story is in the right direction. The trend is in the right direction. Robotaxi seems like it's going to be real in the coming 2 months with the August event. And hopefully it's not just an event that says, hey, it'll come soon, and then it doesn't come for 2 years. I think Elon knows he doesn't have time to waste 2 years at this point, just given how much pressure the company has been under. And if he pivoted the company to Robotaxi, then maybe we're going to get one very soon. And so we'll see. Thomas says, yeah, because those 30,000 cars will have been expensed last quarter and will get paid for them this quarter. Yeah, exactly. And so that's definitely a very good point for why that helps their free cash flow. And also why that, this is narrative changing. This type of earnings, or not earnings, but delivery number, is narrative changing. I mean, everyone thought EVs are dead. No one wants to buy Teslas. People are buying hybrids, which is still relatively true. But a number like this makes you think maybe people will make an exception for their hesitancy for EVs if it's a Tesla, or if the financing is the answer to all of Elon's problems around getting people to buy these cars. And if that's the case, maybe that's a reason, why we're getting some momentum. Pat P says, we got tax refunds in Q2. We did get tax refunds, but people also pay taxes in Q2 in April. So although people got refunds, people had to dish out a lot of money, and that might have hurt, them as well. So I think that could be a wash between the amount of money people had to give away versus the amount of money people brought in to create more disposable income to buy Tesla. Persian Prince says, Robotaxi is not going to be dominated by Tesla. They do not have the cash war chest to pull it off. Doesn't Tesla have 20 billion in cash or 30 billion or something? I don't think it's about cash, dude. I think it's about technology. I think it's about technology, distribution, economies of scale, regulatory. I don't think cash is the issue. I think it's about, can they get that sucker into the world, and can people actually start using it, and they get all the data to make sure FSD doesn't kill you. If they figure that out, and I don't know who you want to bet on besides Tesla. I don't think Waymo, who has been operating, I don't think they're the winner in this race, because I don't think they have the technology to be able to execute at that scale, even if they have the unlimited pockets of GM, which GM even doesn't have unlimited money to burn on this. I think the answer is Tesla. And if Tesla doesn't figure it out, I don't think anyone's figuring it out, especially on a global scale. Waymo's still reserved to Austin and San Francisco. So we'll see. But I think the street's obviously betting it's Tesla. Bitcoin right here is 62,000. All the Bitcoin stocks are down a little bit because Bitcoin is down. Bitcoin did hit almost 64 yesterday, then got rejected at 63.7. So right back down to 62. Look at Tesla. Look at the green candle, 222. It's running for 223. A ton of buys just came in within the last 30 seconds of me talking. Yep, 223. There you go. 223. 220. It's getting a little rejected at 223, but the fact that it went from 221 all the way up to 223, now 222.9, it's fighting to keep going higher. There you go. There you go. This is exciting. This is pretty cool. 0 to 1 says, this was the most obvious trade of 2024 and just getting started. Wait until the street realizes Tesla is also an AI company. I agree. I don't know if it was the most obvious. I think at 130, there was definitely a lot of fear that FSD was not coming for a long time, and that the company was not going to be delivering as many cars this quarter. They denied, that assumption that people had, and that Elon was unfocused. And I know the whole Elon unfocused narrative is not the best. I get it. But I mean, when you got people like Dan Ives saying that he was a child in the earnings call, you really do have a lot of institutional fear, because Dan Ives, talks to all the institutions. And so I think the fear was legit. The thing is, the pivot was also legit. And so by the time he pivoted in Q1 and the stock basically hovered around 170, a lot of people were waiting back for 150. You weren't going to get 150. All the people that missed 140, you definitely weren't going to get 140. And so that was the pivot. The question was, did you believe him on the pivot? And if you believed him on the pivot at 170, and again, the pivot was exactly after Q1 earnings, where he said FSD and Optimus is the future. He got the compensation package done about 3 weeks ago or 2 weeks ago. And then you had to ask yourself, okay, do I believe FSD is the future? Forget Optimus. Do I believe FSD is the future? And do I believe Elon is focused enough because he got paid, the $50 billion, that he's not going to potentially leave the company and go start? If you believe that, then I think that was a reasonable pivot to believe in, and then you could buy the stock. But I don't want to say it was the most obvious. I think for many months, Tesla was very scary for a lot of people. Now, what was obvious was when we got the 120 price targets. I mean, that's when it felt obvious. I remember tweeting about that back in April, when Wells Fargo, I think they reiterated today their $120 buy target. Dude, I was reading a Robinhood price target yesterday. This dude from Barclays Robin had just acquired an AI company called Pluto for like AI finance and stuff. And the dude reiterated his sell, and he was like, "We don't know if the acquisition will go well." And I'm like, really? That's your analysis, dude? Your analysis is you don't know if the M&A is going to go well. And if you've actually analyzed Robinhood, you know they don't like doing M&A. They only do M&A only if they think the tech is so good because they're such good at product that they build their own shit in-house. They don't like acquiring people. And the times that they've acquired, those acquisitions have gone very, very well, a la the X1 credit card that became the gold card, that became the Robinhood gold card. So some of these analysts, sometimes the notes they put out, I mean, I just like how could you possibly come to certain conclusions? And sometimes you really believe maybe it's politically oriented, maybe there's an agenda or something. So when Wells Fargo reiterated 120 this morning, because I think they said deliveries might not come in good, or like we don't think the gross margins are in the best spot, it just makes you think maybe they don't actually understand the story as well. So yeah, I don't know if this was the most obvious trade this year, but this definitely got obvious once Elon pivoted to FSD and the stock kind of was stuck at 170, because at that point, I don't think it was going back below, 130 or 140. It became obvious when Elon got his comp. Yeah, and that was last week, dude. I mean, if we look at the stock, we got the market open in 5 days. Stock was at 186 on June 26th. If we go to the monthly, 160. Wow, we actually touched 160 in June. So I think around this time is when Elon basically got his comp, right? This 160 to 180 range. And yeah, this is exactly the time. And then it went down back to 176, and then it just oscillated in this 182, 185 range. So, I mean, if you wanted a big buy as early as June 11th, less than a month ago, you could have got in at 167 and you would be up, if we do some math right here, 220 minus 167 divided by 160, you would have been up 31%. And by then it was pretty obvious. I mean, by then I can definitely, if anyone says it was obvious at 167, I can agree, because at that point, all of the uncertainties seem to be kind of priced out. And then you had Tesla get ready to go on its run. Did I say market open is in 5 days? That's a new one, right? That's a new one. How did I say 5 days? Dude, I had the craziest dream tonight. Also, you guys know what I bought yesterday? I finally got tired of not having it. I bought an iPhone charger case that I could plug my phone into, and I immediately can charge my phone. It cost $35. I don't know why for $35 I've been struggling with not having a fucking charging case. Like I got so tired of having this phone die out on me random times when I need it. And I was like, you know what? I'm buying a charger case. So now my phone should never run out of battery as long as I don't forget to charge the fucking battery case, which is another hassle. And so my phone should be good, not only for the next 5 minutes, but for the next 5 days as well. So there you go. Jerome Powell will be speaking at 9:30. So I'm gonna open the markets because I have the power to open the markets. And then right after the market opens, we're gonna look at a few stocks, and then Jay Powell should be talking. So I think we'll have like 2 to 3 minutes of looking at stocks. We'll see how Tesla reacts. We'll see how the S&P opens. And then we switch right to Jay Powell, and Jay Powell's going to decide how the rest of the market goes. Amit's going to post a screenshot on Twitter later today. It's still going to say 1% battery. Well, now if I have an iPhone charging case, I will never have, those low battery screenshots, or hopefully I don't have those low battery screenshots. But I just got so tired, bro. Like I was on the train the other day, and like I was like struggling for battery. And I was just like, why? This is the 21st century. I should not be struggling for battery ever. Like I should always, and my life revolves around my phone, dude. And I could tell the battery is getting shittier on my phone. I've had this phone for like basically a year now, and I can tell, Apple's doing what Apple does, and they're going to crack down the battery. So I really do need the charger to be in place. If Apple comes up with a battery that lasts for like 5 days, I will pay like $5,000 for that phone, dude. Like I would legit buy that. Forget Siri and AI. Just give me a battery that doesn't die, and I would pay a lot of money for that. I think a lot of people would agree as well. But it seems like that technology is not there yet. Dougie Fresh says he bought the June 2026 330 calls in the 150s. Yeah, those are up. If we look at those right now, June, I mean, let's take a look at that. So I know that was a big one that was popular with a lot of people. So Tesla June 2026. That 330, that call is a decent amount in the past month. Let me pull that up right now. We got the market open in about 30 seconds. Yeah, that call in the past month is up 55%, and Tesla's up 30%. So if you bought that call, at least anywhere in the past month, you've done relatively well. June 2026, 330. Smokey says I have the 350s for June 2020. Yeah, June, any like mid 300s in June 2026 is not bad. You've done relatively well in that. I bought 20,000 of $125 Tesla calls, and I don't have anyone to tell how happy I am. Well, you can tell the chat. We're all happy for you. I mean, we celebrate when people make money. So if you made money on Tesla, congrats. I mean, look, it was not the easiest buy this year. This turned into an accumulation year, potentially into a growth stock year based on how the year turns out. And if you bought the stock, you deserve to be rewarded for taking the risk of buying it in the low 160s, 170s. Because now we're in the 218s and we're up almost 50% from those lows. All right, here we go. It is Tuesday, July 2nd. We'll have Jay Powell speaking very soon, 9:30 a.m. The stock market is now open. Wake your ass up. Tesla opens at $218. 218 up 4%. So we do have a little bit of weakness from that 223 in the pre-market, but it is gapping up right there. There's the green candle at 219.67. The buys are coming in. People are definitely selling and taking some profits at 220, which is why we're not seeing it rip up to 225, but it is green. Palantir 2589 also had a green candle right there, trying to get back to 2586 on Palantir. S&P 543, Bitcoin 62. Chewy, Roaring Kitty bought 9 million shares of this stock. This is down 2%, so that's not been the best. It's down 6% from yesterday. Apple's down a little bit. Snowflake is still up after being up 6% yesterday. IWM is up a little bit. Google at 184. GameStop 23.29. AMD 158. Nvidia 121. That's down 2.47% on the day. XLE Energy ETF, that's down at 91, or that's actually up 0.5%. Walmart is up. Shopify is up. Rivian up 1.44%. Robinhood 22.48. Tesla 220 on the day. Tesla 220 on the day. And Tesla is green. Jay Powell is not speaking yet. I have him pulled up on the corner, and he is not officially live yet. But Tesla is currently green. 220.57, 220.57 on Tesla. PayPal up 1.19%, 58.91. Palantir, wow, we touched 26. Holy crap. It looks like Palantir wants to break through. I mean, we've been in this 25.90 range for almost 4 days. Yeah, there you go, 26. 26 on Palantir. Let's see if we can hold that sucker and get above 26 and just stay above there for the next couple of weeks, dude. I mean, that's where it'll really become a source of support. Jay Powell will be talking soon. The conference has started, but he's not there live. So let's keep looking at stocks until we transition. Robinhood 22.40, PayPal 58.84, Tesla 218.78. So Tesla not holding that 220. We got a red candle right there, right when it touched 221.13. We got back down to 218. Now that green candle is fighting right back above there. So the dip's getting bought very easily on Tesla. I mean, the fact that it's not going below like 217-ish right now is really exciting. Rivian benefiting a little bit. Is Lucid up because of the Tesla news? Lucid is up 0.38%. Arc Innovation, Kathy owns a lot of Tesla. She bought a lot of Tesla at 170, so she should be green as well. This ETF should potentially break out a little bit if Tesla broke out. I mean, Tesla's like 9% of the portfolio. For those that are just joining, Kathy Wood did buy 199,000 shares of Palantir yesterday as well. So Palantir is now number 9 in the ARC ETF in terms of weighting. It's about 3% of the fund. Tesla 218. Where's Nvidia? Nvidia looks like some Nvidia profits. Yeah. Looks like some Nvidia profits are going to Tesla. 121 down about 2% of the day. And that's normal. That's natural. That's a healthy broadening of this bull rally. To see Tesla go green, the only Mag 7 that hasn't been green, I would welcome it. I think a lot of the market will welcome some profits being shifted from the winners into companies like Tesla. Where's Palantir? Is that 2630? Holy crap. Oh my God. Look at that. Talk about a breakout on Palantir. Talk about a breakout on Palantir. 2628 on the day. So it looks like Palantir is not only going to let Tesla have all the fun, Palantir is going to move with it. Look at that. Palantir's like, no. You could have your deliveries, but we're going to break out as well. Okay, not bad. So we got Palantir at 2630. We got Tesla here at 219. Jay Powell is speaking on this panel. I'm going to transition there. The next 20 minutes will likely affect a lot of stocks today. So here we go. Here is Jay Powell.
Panelists here going at different speeds, I would say, when it comes to reversing that course. So would love to just open it up, President Lagarde, with you and ask, where are you in this process? Because you cut in June. So now what?
Well, it's been a journey. You can't just say, "Oh, we cut in June." It's coming on the back of a period of hikes, which was unprecedented, facing shocks that I tried to describe yesterday over dinner, and followed by a period during which we held rates untouched, and during which we were restrictive enough to actually see our medium-term target reach that 2%, which is our objective. And most recently, we have seen in our round of projections, which are really important, September, December, March, and June, we've seen that 2% target with an oscillation of 0.1 about it at the last quarter of 2025. So it's on that basis, and on the basis of what I'm happy to describe as, the three-leg reaction function and all the underlying data and information that feeds those three legs, that we decided to do a 25 basis points cuts. But in the same breath of air, I also said that it was not a linear process, that it was not a predetermined path that we were embarking upon, but a step that would be followed by further review of data, further understanding of where our three legs reaction function would be. So that's pretty much where we are. And I would simply maybe add that we are very advanced in that disinflationary path, and we are in that sort of slow recovery, which came about during the first quarter, and which we hope will persevere. But all of that is flawed with uncertainties and big question mark about the future.
Sounds like you're setting up the market for a pause now. Is that right?
I'm not setting up anything for anyone. I think that it's for everyone to really look under the skin of the economy and see where it's heading, and appreciating what our reaction function is and how we're likely to decide.
Chair Powell, you have also been on a journey and have been on hold since last July, have not cut rates like the ECB in June. Why not? What are you waiting for?
So let me say that sitting here last year, there was a lot we didn't know, and we didn't know that we were just about to embark on a period of 7 months of much lower inflation readings. We didn't realize that the second half of last year was going to be an extraordinary year from a growth standpoint, and also from the standpoint of the labor market. So things actually worked out in the second half of last year in a remarkable way. Then, as you know, in the first quarter of this year, we continue to have solid growth in the first half, actually, solid growth, and a labor market that's still strong, although we've seen a continued rebalancing in the labor market. And inflation, after pausing in the first quarter, now shows signs of resuming its disinflationary trend. So it's a little bit different journey. So where that leaves us is we've made quite a bit of progress in bringing inflation back down to our target, while the labor market has remained strong and growth has continued. We want that process to continue. I think the last reading and the one before it in inflation, the one before it to a lesser extent, do suggest that we are getting back on a disinflationary path. We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. That's what we've said, and what we'd like to see is more data like what we've been seeing recently. We'd also like to see the labor market remain strong. We've said that if we saw the labor market unexpectedly weakening, that is also something that could call for a reaction.
How much more confident do you want to be? The PCE number 2.6, that wasn't too bad that we got last week.
That's right. So we're actually on a 12-month basis. We're actually at 2.6, both headline and core for inflation, and that represents really significant progress. I think we peaked at 5.4% in core, and the same thing has happened in headline. We've gone from 7.1 to 2.6. So yes, we've made a lot of progress. We just want to understand that the levels that we're seeing are a true reading on what is actually happening with underlying inflation. And as we were saying at the last part of last year, people were saying, you need to declare victory, this is over. And then we had a quarter of inflation, which was well above 3%. So We want to be more confident. And frankly, because the US economy is strong and the labor market is strong, we have the ability to take our time and get this right. And that's what we're planning to do.
So September?
I'm not going to be landing on any specific dates here today. Let me also say that we're well aware that if we go too soon, that we could undo the good work we've done in bringing down inflation. And if we go too late, we could unnecessarily undermine the recession, the recovery, and the expansion. And so we're aware that we have two-sided risks now, more so than we did a year ago. That's a big change. I'd say risks are coming much more into balance now.
President Campos, you have been on a different journey because you've actually been cutting rates for much of the last year and have recently paused. Why? What are you seeing in inflation data, and what are you going to do next?
Okay, so if you go back a little bit in the history of time, so Brazil was one of the first countries to hike rates. I think in part because we had a different call on the dynamics of inflation, both locally and globally. And I think that turned out to be correct. And then at some point in time, we started the easing cycle. And throughout this process of easing, we've seen that inflation has converged. We have some of the problems that are common to advanced economies and other Latin American countries, which is labor markets very strong. So there were 2 points of attention. One was labor market being that strong, would that at some point in time mean inflation in the service side? And even though we haven't seen that yet, what we try to do is to try to estimate what would be the components of labor in every service so that we can anticipate if that were to happen. We haven't seen it, but we think it's, there is somewhat of a correlation when you look at the margin. And so most recently, we decided to pause. That had to do not only with the current numbers and with this suspicion that we had service inflation that could peak at some point in time, and also because food prices were going back up a little bit, and I also think that's not only happening in Brazil, it's going to happen in some other places too. But also has to do with a lot of noises that we had. So we decided to interrupt the cycle. More recently, we've had a sell-off in some of the emerging market countries. Brazil was more affected. But I think this has to do much more with noises that were created than the fundamentals. And the noises are related to 2 channels. One is the expectation on the path of fiscal policy, and the other one is expectation on the future of monetary policy. So when you had these 2 at the same time, I think it created uncertainty enough that for us, we needed to interrupt and see how we can fix that channel and how we can communicate better so that we can eliminate those noises. Because there is a big disconnection with the current data, both fiscal and inflation data, and the expectation. So what happened in Brazil is the expectations started to the anchor, even though the current data is coming as expected.
Right. So you're talking about the fall in the stock market and the real recently when you talk about the markets.
But for us, what matters is how this gets into our reaction function. So I'm talking about expected inflation, the long end of interest.
Okay, guys, we get Jolt State at 10 a.m. I'm going to go right back to that. I want to take a quick look at stocks, and then we'll go right back to that. Jay Powell's probably going to talk in like 2 minutes. So Tesla's still 220, up 5% on the day, doing not bad at all, going up 5%. Again, Jay Powell did say the word recession right there, if you guys heard him. A little bit of a potential slip in terms of how he said that, but market didn't really react to that, didn't care too much. S&P does go green, up 0.03%. It was at 542.99, now at 545. Again, we have not had a 2% red day on the S&P in the past year. So for it to go red, we would need to see a string of events actually pull us down. And so far, Tesla is kind of holding its weight in the S&P right now, up at $220, up 4.86% on the day. Deliveries were at 443. Production was at 410, so delivered about 30,000 more than they produced, which is why the street is excited. Stock is up 4.9%. Palantir broke through 26.36, so a ton of orders at 25.89, busted it through the 26.30s, and now coming down a little bit at 26.07, but we did see some momentum there in the context of Palantir. Jay Powell's still not talking yet, so I'll go back to him once he starts talking. PayPal also up 1.86%. TSLL, which is a 2x leverage fund on Tesla, that's up 10.39% of the day. Bitcoin 62,000. DJT down 2.93%. President Biden did address the nation for 300 seconds, otherwise known as 5 minutes, about the Supreme Court's decision about the president having pretty much absolute immunity on doing any official acts granted by the Constitution while they have the office. And Biden basically said, hey, we need to not vote for someone who would take advantage of the Supreme Court's 6-3 decision. Biden's argument is basically, I'm not going to do bad things, therefore I wouldn't get into trouble, but Trump might do bad things and he would get under trouble. So, I mean, that the one thing I think people were waiting to hear is, would he take questions? He didn't. He kind of just read off a teleprompter. So, I mean, market didn't really react to that press conference too much. It was only 300 seconds. He came out, spoke, and then he left. Tesla right here at 221, up 5.5% right now on the day. And so it wasn't the biggest press conference in the world, but also was, something that I guess he just thought he wanted to do based on the Supreme Court decision. Palantir now giving up some of those gains, back down to 2602. Robinhood 2251. Tesla's the one maintaining its momentum and actually going higher, up 5%, which is not bad at all for Tesla. All right, let's get back to Jay Powell and back to the press conference.
Also suffer from the lag impact of the labor system that we have in Europe, where clearly bargaining agreements are negotiated not only on an annual basis in some country, but sometimes on a triennial basis in other countries. So you have this catch-up effect. For those people whose renegotiation took place early this year, they had not had a negotiation of wages in the last 3 years. In the meantime, of course, inflation went up and their real wages went down. So there is an element of catch-up. So we need to really unpack all that to get to the root causes of inflation behind services. So we'll continue to look at that. We need data. It applies to wages. It applies to profits, because we are seeing profit gradually declining compared to the height where they weren't at the end of 22. But we need to see those profits absorbing the wage cost increases to make sure that the second round effect is out of the window and services are also going to be on a declining path as well. But services is the difficult one.
I was just going to pose that Taylor Swift is touring Europe this summer, and there tends to be an inflationary effect in services. Am I right, Chair Powell? We saw it last year, didn't we?
It's not just Taylor Swift, others have come as well. Larry Spring.
I don't know. I saw her at Wembley and there was a lot of spending going on. No, but how do you look at the services, the stickiness of the services inflation, and how tied it is to wages, which have been rising?
Famously, services inflation is stickier, and famously it's tied to wages. I would say, so look at the U.S. labor market. We've seen a pretty substantial move toward better balance than we had a couple of years ago when labor was in extreme shortage. So what you see now is an unemployment rate that's moving back up toward a more sustainable level. You see wage increases moving back down toward a sustainable level of wage increases, inflation, and productivity. And you see, vacancies to unemployment ratio coming back to where it was pre-pandemic, and so many other measures I could mention. So that's what we're seeing. And so the labor market, wage increases are still a bit above where they would wind up in equilibrium, but nonetheless, you can see the labor market is cooling off, appropriately so, and we're watching it very carefully. But it doesn't look like it's heating up or presenting a big problem for inflation going forward. Indeed, it looks like it's doing just what you would want it to do, which is to cool off over time, not quickly, not suddenly, not steeply. It's kind of what we've been hoping to see and have.
This is dovish. It's what we've been hoping to see. This is good stuff by Powell. It's what he wants in terms of the inflation data.
Have been seeing. So, and services generally they're such a mixed bag, particularly non-housing services are a mixed bag. Some of what you're seeing is catch-up inflation from inflationary pressures that happened earlier. That's true with insurance. It's also true with housing services inflation, where you've got some pent-up rent increases that have to work their way off. It turns out it takes more than 1 year for that to happen. It takes several years. So we see all that in train, and we don't see ourselves getting back to 2% inflation this year or next year, or maybe late next year, but in the year after. The main thing is we're making real progress.
Can you keep cutting President Lagarde if he keeps holding?
That's a good question.
Does it make it harder?
Well, look, I'm going to give you the conventional response because that's the conventional question you ask me. We do take into account the spillover impact of whatever is decided by other esteemed colleagues. And obviously, my esteemed friend, Chair Powell, is one of those. So we take that into account, but we also determine our monetary policy on the basis of what we see in our economy. And we look at the data that we get, the impact that multiple factors have on our economies and its numbers.
Does it matter for you, President Campos, what the Fed does next?
Well, I think it matters to an extent, but I think there is one point that is worth mentioning, which is more recently we've seen a sell-off in some of the EM, and especially the EM that had more. There were like more the best cases for investment. And you see that this is being explained with local news. But when you have a lot of sell-offs in different markets and they're all explained by local news, you have to ask yourself if there is a more fundamental factor driving that. And I think there might be. It's difficult to make the case right now, but definitely what we see now is there is more risk premium in a lot of the emerging market countries. And it was very synchronized with the long end of the US curve, and that correlation broke. So we've seen the last couple of weeks that even though the 10-year yield is more or less stable, even actually going a little bit lower, we saw a bit of a sell-off in emerging market countries. And I think that has to do with the fact that as you go for longer with higher rates and much higher debt, you start extracting liquidity from the market, and eventually you are repricing that liquidity. It could just be a temporary adjustment in EM, or it could be the beginning of a more profound movement. We need to wait and see. But I think the correlation between the U.S. Treasury and some of the EM has been broken in the last couple of weeks, and I think we should pay attention to that.
What about the fundamentals in emerging markets? Because the economies seem to do better during this hiking cycle than they have previously. Why do you think that is, and does it continue?
I think most EMs did a better job in terms of, or at least an equal job in terms of anticipating the process and starting the hiking process. Also in the fiscal part, on average, emerging market countries spent more or less 10% of GDP facing the pandemic. Advanced economies spend a little bit more than 20. So I think there is also this thing which didn't happen in the past, which is by and large, emerging markets were able to deal with the pandemic spending less. And actually, when you look at the fiscal post-pandemic, emerging market continues. It's not the case of every country, but continues to do a little bit better. So I think that also change the dynamics. And one other thing is, I think the independence of the central bank and the maturity that a lot of the central banks have gained in emerging market proved to be very useful during this process of the pandemic.
I mean, all of your economies did better than expected with the interest rate hikes. Wouldn't you say, Chair Powell?
Yes. I think particularly, I mean, many forecasters had a recession in 2023, which not only turned out to be wrong in the case of the U.S., we had well in excess of 3% growth. So.
But you still see policy as restrictive?
Yes, we do.
How restrictive?
Well, so that's kind of an empirical question. So I guess I would say, if you look at, we do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings, and now a slight softening in unemployment in the form of wages. You see demand coming down, not just the supply that we're getting, but also demand coming down. You also see the effects of high interest rates in the housing market and in some other interest rate sensitive things. So you see that, and I think, I do think that restrictive policy is working hand in hand with this broad supply side recovery we've had, where we've seen the unwinding of the shortages and bottlenecks from the pandemic. We've also seen a recovery in labor force participation among prime age individuals in the U.S., and then some immigration, which is also been a positive supply shock. So we've seen all those things work together to give us, really significant declines in inflation. At the same time, we've got a strong labor market and growth. So this was it's a great outcome for the people that we serve, and it's one that we want to do everything we can to foster.
So why not just cut rates to protect it?
It's what I said earlier.
Is it a bigger risk? Sorry, I'll rephrase. Is it a bigger risk that you cut prematurely and inflation stays sticky, or that you wait too long and the economy loses more momentum?
That is the question. And so, and our answer to the question is we serve a dual mandate, right? And these two things are embodied in that mandate. The risk on the inflation side is that you move too quickly, inflation comes back, and we didn't really solve the problem. And then we have to go back in, and that would be very disruptive to the economy. So the other risk is that we wait too long. We understand that, and the labor market softens too much. Perhaps we lose the expansion. So needless to say, we don't want to do that either. So, but at the same time, so we've got to balance those two. And again, given the strength we see in the U.S. economy, we can approach that question carefully. But as I said earlier, though, you see, a year or so ago, we were talking about inflation, and our framework called for us to focus on the variable, the mandate that is further from its goal. That's not. They've come back much closer into balance. And a good way to see it is the beverage curve analysis that everybody talks about and looks at. We come straight down the beverage curve, but you're really getting to that place relative to job openings and hiring rates, where traditionally the beverage curve is flattened out, which would mean higher unemployment as a result of further declines in job openings. So you can't know that with precision, but it's very much understood by us that we have two-sided risks and we have to manage them.
What about the recovery in the Eurozone, President Lagarde? It's also been pretty resilient, especially on the unemployment front.
All right, we'll go back to that, but Tesla right here is, well, there's this thing called the moon, and Tesla decided today that it wants to go to the mother freaking moon. 224, we got rejected at 225, now at 224. It's up 7% on the day. S&P's red, Tesla's green. Now, J. Powell did say he doesn't think inflation is getting to 2% until end of 2025. I don't think that's new news. I don't think the market's really going to care that he said that. But he did say we're making good progress, which is pretty much all we wanted to hear. And it seems like, market's fine with that. S&P in general, a little bit red today. Tesla's getting most of the momentum. It's green. NVIDIA right here. NVIDIA 122. NVIDIA's down 1%. NVIDIA's down and Tesla is green. Tesla is green. Wow, the market cap of Tesla is above 700 billion. 715. It was I think it was 615 a couple days ago, or last week, or 2 weeks ago. Yeah, 2 weeks ago it was closer to below 600. So basically 100 billion in market cap was added to Tesla in the past 7 days. Again, guys, this stock was at 167 on June 11th, which was not that far away. It's not like the dip was months ago. I mean, it was still it was 30% lower at this point, 35% lower. Less than a month ago. We do have the Jolt report. Yes, in 5 minutes. Thank you for reminding me on that. So in 3 minutes now, we'll see the job openings. That's another reason the S&P might be red, is because they're afraid those job numbers are going to become hot. We want to see less jobs open, because that's going to mean less pressure on inflation. I think there's like 8.5 million jobs open right now. If that comes down to like 8.4 or something, that's good. However, that could also mean unemployment is rising, which is bad, Palantir 2614, because then the consumer is going to be struggling. So I don't know how the market's going to interpret it, but theoretically, I'm sure the market, because they want inflation to come down, they want to see jobs come down. If jobs go up, then that means people have jobs, which is great for the consumer, great for earnings, not the best for inflation. So it's in a really kind of tricky situation. We'll see exactly how the market reacts to that within the next 2 minutes when we get those numbers. I'll pull up CNBC and we'll get those numbers live as well. But shout out to those who bought the Tesla dip. I actually did have some Tesla options. Like what is it? Like 2 weeks ago, I bought 260, 265 spreads. But then I sold them just because I needed cash to like do some other stuff. It was only like 3 or 4 options. It was like $600-700. It's not like it was a big position or anything. But I had a feeling even at 180, dude, I was like, I think this is like gonna blast through 200. I just didn't keep those options, and I really didn't buy enough stock, quite frankly. So if anyone did buy stock, congrats. I mean, you deserve a good congratulations if you bought some stock. I mean, most of the stock I was buying, quite frankly, on the big dip was on this one, Palantir at 21. That's where I deployed a decent amount of capital to buy the dip. So, I mean, that's another reason I don't have a big Tesla position, because when Palantir got to 21, when Palantir fell 25% after Q1, that's where I put a lot of my money at. But I mean, for those that are big Tesla bulls, if you are accumulating anywhere below that 180 range, it's been great time to accumulate. Absolutely incredible time to accumulate on Tesla. Also, yeah, put in the chat who bought the Tesla dip. If you bought TSLL, if you bought options on Tesla, if you bought stock in Tesla, anywhere below that 190, 180 range, you're probably up a lot right now. And depending on the short-term expiration of your options. But by the way, my options wouldn't be up a lot either because they were like June 2026. So, I mean, maybe they would be up a little bit right now, but because they're so far out and the strikes were actually closer than far out of the money, I don't think the options would be up that much. But if you bought like September calls or August calls, then you're up a lot. You're up a decent amount of money. Kim doubled at 140. I love it. That's incredible. Prashant bought at 140. John bought at 170. Spencer got 250 leaps for June 2026. That's incredible. Thomas added more from 180 to 140. I love it. Sold covered calls in Tesla today, June 25th at 350. Okay. So you probably got a decent premium for that. June 25th, 2025 for 350. Could Tesla be $350 by June 2025? That would put it basically at $1 trillion. That means you got, wow, holy crap, you got $18 per share on that one. Yeah, that's not bad. I mean, that's not a horrible covered call if it stays under 350. Okay, the JOLTS numbers, we should be getting them pretty soon. CNBC is still streaming this J-Powell conference. So let me go to Twitter and let me see if I can find JOLTS. Oh, we got him. I don't know if that's good. 8.14 million versus 7.96 expected. I don't think that's good, dude. Hold on. How's the market reacting to that one? Yeah, S&P's down. We got a red candle. That means we have a lot more jobs expected, bro. That is, oh boy, that's not the best for inflation. Oh, that's not the best. That's a pretty hot number, if I'm not wrong. The market wanted 7.9 million and we brought in 8.14. That is a lot more jobs that are open. S&P is going green now. Oh boy, this must be so hard as a macroeconomist to try to make sense of this. I mean, like, you would think the market will kind of tank on this, but market's holding up. Yeah, Tesla's still green, 225. Palantir's green. Robinhood's down 1%. Enphase is fine. Bitcoin basically where it was all this morning. Market's not reacting at all. Maybe it's a delayed reaction. S&P is going green on this, dude. S&P is going green on this. Wow. Amid higher job openings means more layoffs happening, opening up jobs. That could be one argument. Yes, maybe that's the bull case for higher jobs. From my understanding, higher jobs means that there's just more expanding activity in the economy, right? We're not contracting, we're expanding. There's more. There's like a new pizza shop that needs employees, not, Walmart fired a bunch of employees, therefore they need to hire a bunch of employees. Although that is a very plausible thesis as well. So maybe that's an argument for why it could be good and bullish. The only thing is when the expectations are so detached from the reality of the numbers, the market tends to swing in a wild way, even if there's a good thesis for why the expectations don't match the actual estimate. But it doesn't seem like the market cares right now. 545 on the S&P, and we're green. Part-time jobs, that could be an argument as well. But this is increasing the chance for a rate cut. Yes, but again, there's a Goldilocks zone we want to get for the rate cut. We want to see inflation come down and the Fed cut rates, Tesla right here trying to go for 226 to make sure that inflation doesn't get super or to make sure that the economy doesn't break. We don't want to see the Fed cut rates because the economy is breaking. I mean, that's when you kind of have a bearish rate cut, and maybe we don't melt up towards the end of the year. Everyone's thinking we get a soft landing, we melt up, we have a great year, and then everyone can sell their shit January 1st, 2025, and then just hold on for dear life going into 2025. But if the Fed's going to cut because the economy is sucking, then earnings are going to suffer. That's the problem. Now, because if people don't have jobs, they can't buy shit. If they can't buy shit, then earnings are not going to go well for companies. But let's see. I mean, this is just one piece of news for Jolts, and hopefully it's not, not as bad. Again, for those just joining, the Jolts report came in at 8.14 million versus 7.93. Seems like the market doesn't give a shit, and market's going higher. S&P is now green, but that is a much hotter report than we expected. All right, let's get back to Jay Powell.
About that.
I am not focused on that at all. And that's not just a talking point. I really think that we just keep doing our jobs. I mean, the US economy, we have 4% unemployment. It's growing at 2%. Inflation's at 2.6%. Let's keep that going. Let's do our jobs. History will judge. I think if we can keep things on that path, that's what I'm focused on. That's the only thing I'm focused on. And as I mentioned, I do think support for the Fed's independence is very high, where it really matters on Capitol Hill in both political parties, among the leaders and most of the following. And so I worry about getting the job right. That's what I worry about.
I know you guys don't want to touch politics, but President Lagarde, it does bring into focus the fiscal policies, right? We heard President Campos say it. There are concerns about the deficits in France, if the far right should win. There are concerns in the United States about the deficits. So I do wonder if you have something to say or to warn on the fiscal front as it relates to making your inflation fight harder.
Well, fiscal matters enormously, true. And it matters in two different ways from my perspective. It matters from a sort of conjunctural type of way. And thank goodness the European authorities have agreed on the fiscal governance that will take over after the Growth and Stability Pact has been suspended and now completely replaced. So there is a framework within which members of the European Union have to operate, have to control the direction of their debt, have to make sure that it is sustainable going forward through the efforts that they deploy, and have to keep their deficit on watch with enough flexibility. And that's the second part of fiscal spending that I'm concerned about, with sufficient of an impact of a focus on productivity, on growth, of investment that will be conducive to both. And my hope is that in addition to operating within the European fiscal framework, which has been agreed by all European members, in addition to that, countries will actually look at the structural changes that they have to either continue to have in their arsenal of tools, but also that they will continue to improve going forward, because I regard that as critically important for productivity purposes, which we are lagging behind and have been lagging behind for a long time. So we're not so worried about fiscal expectations as
make you nervous when it comes to the progress you've had on inflation. If we do see more expansionary fiscal policy, more deficit, bigger deficits, bigger debt loads?
So I'm gonna give you the traditional answer to some extent, and that is that we just know fiscal policy is a job for elected people. We're not elected people, so we don't comment on it, and particularly in advance of a presidential election, we're not commenting on anyone's particular policies one way or the other. I will say more broadly, though, the United States is running a very large deficit at a time when we're at full employment, and it just is, the level of debt that we have is not unsustainable. The path that we're on is unsustainable. That's completely non-controversial. I would have thought that this is something that should be a top-level issue, and you do hear this from a lot of elected officials, but it should be a real focus going forward, is how do we get back to a sustainable path? Because you can't run these kinds of deficits in really in good economic times for very long. I mean, I wouldn't say I can't really speak to the time, but in the longer run, we'll have to do something sooner or later, and sooner will be better than later.
President Campos?
Yeah, let's do a basic.
Okay, so I think that's pretty much it from this conference, dude. Jay Powell talked about all the stuff that we wanted to hear him talk about: debt, fiscal spending, monetary policy, what's going to go on with services inflation, wage inflation. He pretty much addressed everything we all expected. Market not reacting to it too much. S&P still green. Again, that JOLTS data as Tesla right here at 227, incredible. That JOLTS data, as Akshat said in the chat, the narrative could be shifting from a weaker job market and a potential recession to a strong job market, no recession, which is why if we get a rate cut, it might be into strength versus into weakness if there is no recession coming up. So that could be an argument as well for why markets go green and why Tesla goes green as well. And we get some momentum. Thomas says, admit, he just said he's cutting in July. You missed it. Oh my God. Look at Tesla, dude. 227. Look at Tesla. Okay, so let me show you guys the call that I bought on Tesla, but then I sold. I bought like 2 of them, so it wasn't a lot of money, but this was the one right here. I did the spread between 250 and 260. So this is a $10 spread. I did this when the stock was at like 180, I think like 2 weeks ago. And so it was trading, I think, for about 230. Right now it's trading for 315. So you could have bought it at that time for about $2.30. Right now it's at 330. So it's up about 35% from then, which is good. Not bad at all. Not a bad move given that Tesla is up as well. And at the time when I tweeted about this, 260 seemed like it was far out of reach. Like it was hard to get to 260. This was for June 2026, by the way. So this is pretty far out. Now, Tesla goes up $100 billion in 2 weeks. It kind of feels like 260 is possible. The question is just going to become if robotaxi is the way to get there. Let's also look at some selling of the covered calls. So let's say you sold the covered call yesterday at 220 for July 5th. Today, that call is worth $900. There's 25,000 open. So yesterday you could have got about $200 in premium. Today, whoever bought that call from you and paid $200, they're up almost 4x. And they're going to be able to sell it for $800. That's the tough part about selling covered calls. Now, obviously, you can roll this position. You can navigate it. I mean, if you're really underwater, but the buyer definitely got the better part of the deal here because this thing just 4x'd in a day because Tesla delivery numbers absolutely crushed and it was able to continue to go up. So not bad. Not bad at all for Tesla. Where's S&P? S&P is okay, going red a little bit. Tesla's going red as well, just a little bit from 227 to 226. Altel says, dude, my Tesla 816-200 calls are up 290%. Yeah, if you bought calls over the next couple of months, you're up the most. If you bought calls really out into the future, you're probably up, but not up as much as like someone who got a call for August. And the reason you're not up that much is because the person in August or July is taking a lot more risk, right? I mean, especially if you bought a call expiring in 3 days, you're taking a ton of risk because what if Tesla doesn't get to 220? Now Tesla's at 226. For Tesla to go down to 220 would take a little bit of work here, right? I mean, we'd have to see a nice couple red candles. And so if you bought the 220 call yesterday for $200, although the seller of the call might have thought you were gambling, I guess you were sophisticatedly gambling. And you're up 4x on those calls. Not bad at all. There's no cut in July. What's his name? Thomas was messing around. I don't think Jay Powell would say he's cutting in July. If he did say that, the market would probably be up a little bit more right now. But Jay Powell's not going to say that. Enphase here at 97. Nvidia down 2.5%. S&P is now red. Robinhood slightly red, down 1%. Palantir still above 26, even though it hit 2630 today. 2609. Tesla's the only one that's really holding on to these gains and superseding them here at 225.65, trying to get above 227, which was the top a couple of minutes ago. 2026 leaps are up 19% today. Yep. If you have 2026 leaps, those are up as well. See, again, here's the difference. If you have 2026 leaps, you're up 20%. If you have July 5th contracts, you're up 400%, right? And that's because you get the extra 2 years for your thesis to play out, which is why people do leaps. But leaps can still do very well. You don't have to just only do weekly options. The stock just has to go in the right direction over time. SMCI, where's SMCI? Where's SMCI? SMCI is 836. That's up 3% on the day. Okay, SMCI is doing well. Where's Dell? Dell as well. Dell's down a little bit, 141. Tesla here still at 226. Still at 226. Bought TSLL up 73%. Yeah, when I asked if anyone bought Tesla, I saw a lot of people in the chat bought Tesla at one. Microsoft's at all-time highs. Hold on. What is that? Microsoft? Wow, Microsoft hit 457. Now it's back down, 456. Dan Ives also just tweeted about Tesla, continuing to say they are the most undervalued AI name in the broader market. Yeah, he says the new bull run in Tesla has begun in our eyes, with the mojo front and center for Elon Musk with a historical robotaxi day, August 8th, and demand turning around for Tesla, most undervalued AI play in our view. I mean, let's see. Look, Dan Ives did get the Apple pivot right at 170. He was saying Apple is the king for AI. And although you could say Apple's expensive at a 30 PE with zero growth, the AI upgrade cycle, if that's happening, the market's paying a premium for that upgrade cycle. And I mean, I don't know if you want to bet against Apple for that premium cycle. I do think the Vision Pro is stupid, and I don't think the Vision Pro is going anywhere unless they make a really, sophisticated new generation of it that's much cheaper. So that's a dud. But the AI upgrade cycle, it does seem like the gateway towards AI is going to be via the iPhone. And if that gateway is as spectacular as Apple thinks it can be, people are probably going to upgrade. And the question is just going to be, what is the user experience like using AI on the iPhone when that upgrade happens? And so that is where, his $250 Apple price target comes from. Tesla obviously was stuck in the gutter most of the year, now at 226. Tesla is now down. Is Tesla positive for the year? Tesla stock year to date? Wow, it's down 8%. 8% seems reasonable to recover. And if Tesla recovers and goes green to end 2024, 2024 will be a historic year for the stock market. I mean, for Tesla to recover their basically 50% drawdown and go green. I mean, one thing it'll tell you is anyone who voted against Elon's compensation package was just wrong. I mean, it was just absolutely wrong. And Kathy would have been absolutely right for buying the dip. Kathy, I think her average on Tesla is still far below the current price. Arcs up a little bit right here. It'll be interesting to see today if she sells any. I don't think she would, but whenever Tesla runs, she does take a little bit of profits. And so let's see today if there's a sell order. I think if there was a sell order, maybe it was this red candle right here, but obviously that dip got eaten up right at the top at 227.73. So we'll see. I don't think she would take profits, but if she did, today might be the day to do so. I bought one share of Tesla to have it in the portfolio. Now I'm up 30%. Yeah, it's again below 160 is, and again, I will publicly say below 150 or 140 on earnings. I was scared as hell too, dude. I was like 125, 130. Like, it's hard to go against the grain on something like Tesla, And again, my conviction on Tesla is large, but it's just not as large as other companies. Like when Palantir was 21, I had dude, I bought those shares at $21, falling 30% after earnings, and I slept like a baby at night. I did not care. I could not buy Tesla at 140 sleeping like a baby. I mean, that's tough. You got to really fucking believe that what the story is going to play out to be. And you get rewarded for that if you were right. So for those that did buy when it got really low, I mean, you did the contrarian thing. You bought when everyone was saying to sell, and you deserve to be up. Even if you bought at 160, 170, still amazing dip on Tesla as well. Okay, so that's what we got going on in Tesla. Let's see what other news do we have going on in the broader market. So we got that JOLTS data. Again, market seems to not care that much about the data. So the data was good, and the market was fine with that. We looked at Fed Powell. Is he still talking? I don't think he's still talking. There's no way he's still talking. Yeah, they're done. Oh, he's still talking. Oh my God. All right, let's go back to Powell. Why is he still talking? Wow. All right, here we go. Let's go back to Powell. I didn't know this thing would just keep going. Here we go.
So, our star. I guess I would start by saying that The thing that we write down as part of our summary of economic projections, and the thing that economists mean by R-stars, is a longer run concept. It's the rate of interest that would hold the economy at equilibrium at a time when we're at stable prices and maximum employment, and there are no shocks hitting the economy. So this is not the economy today. So the first thing to say is that when we're sitting in the boardroom in Washington thinking about whether our policy rate is the appropriate rate for this economy right now, we're not battling over what long-run R-star is, because this is a different economy. This is an economy that's still recovering from the pandemic. And so many forces are pushing it this way and that way, and there's really not a lot of precedent. So it's a very challenging time, but it's not, the question, the R-star question is a really interesting question, and that is, are we going to go back to the very low levels of neutral rates that we had in the recovery of the global financial crisis? Or are we going to go part of the way back from today's high rates to that? And intuitively, most people think that we won't go back to those very, very low rates that we saw, during the global financial crisis recovery period. But we don't really know. I mean, the neutral rate is moved around, we think, by slow-moving, longer-run forces, demographics, technology, productivity over time, all of those things move it around. Ultimately, the balance between savings and investment. So it's a great conversation to have. But honestly, when we're looking at policy in the boardroom, it's how is our policy affecting today's economy, and do we think we're getting the results that we want? And by and large, in a world where this isn't a world of precision, we think we are. We're getting a gradually cooling economy, a gradually cooling labor market, progress on inflation, 4% unemployment, 2% growth. We're getting kind of what we would want to have, and so that's, I worry that some people, no one in this room, but some people think that the R-star debate is the thing that dictates our assessment of how restrictive policy is. It's really not, unless you think that the long run rate is the same as today's rate.
I think that investors are trying to figure out, though, where you're going to end up and what the policy path looks like once you start cutting rates, and it becomes important then.
No, I agree. It does. Yeah. It's what will we discover to be? We'll find it empirically. What will we discover it to be? And I think there's a debate going on. There are people who feel very strongly that it hasn't changed and that it has changed, and ultimately it's unknowable. It does matter for the longer run. It matters for where rates will settle out, but it doesn't matter much for policy decisions today, which are the ones we're actually making.
I guess we want to know if they're like 10 cuts coming or 15 cuts. I mean, do you think, President Campos, it's changed post-COVID? Are you dealing with a different economy?
So the R-star story for emerging market countries is a little bit different. So for example, if you had a table of countries of Latin America, you would find that at least the models internally used by their own central banks, in some cases you had R-star going higher, like Brazil, from 3 to 4.5.
Okay, so Jay Powell kept saying the stuff that he was always going to say. So it is what it is. Nothing too crazy right there. Tesla 227.69. This thing hit 228 while Jay Powell was talking. Wow, it hit 228.38. Wow, dude. Holy crap, man. Let's go, Jose. Jose, what's up, Brody? Jose has a decent sized position in Tesla. Not bad. Jose, if you're free for 5 minutes, I can send you the link if you want to hop on. We can get your thoughts on Tesla. Look at that. 227.70. Dude, this is so nice to see. It's so nice to see. SoFi's at 633. Dude, fucking SoFi. This fucking stock. Oh my God, bro. Why is it down today? Who woke up and sold it from 660 to 634? What guy dropped it 30 cents? What is happening? Why does this thing just not? Oh my God. All right. Tesla 227.7. This is so exciting, dude. I'm so happy to see Tesla up. Look at that. 228. You know why I'm genuinely happy to see Tesla up, even though I don't have a massive position in Tesla? I fucking love Elon Musk. I got to show you this thing that Elon tweeted the other day. I love Elon so much, and I don't agree with him on literally everything he says, but the more older I get, the more I realize how hard this man worked for his success. And And it's kind of just like, you just have so much empathy as an entrepreneur, as a builder, to want to see Elon succeed, because if he doesn't succeed, who's going to succeed? Like, if Elon's not the one that's changing the world, who else has the guts and the balls to make $100 million off of PayPal and then take 50 million, put into Tesla, 50 million into SpaceX, and not go on a beach and relax? Like, who else has the balls to do that if it's not Elon? There's not that many Elons in the world. And so for all the weird things that he does, and like none of that matters at the end of the day when you change the world. And the stock price is a reflection of Elon actually changing the fucking world. And I'm just so happy to see that he continues to change the world. Like, oh, I would give him that Hawk Tua. Oh, by the way, the Hawk Tua girl, she's like, she did a podcast. I got to show you guys a clip of that. She's like a real girl, dude. She's like a real person. It's like, it's pretty incredible. Let me play that clip of the Hawk Tua girl. She met Shaq yesterday as well. She's turning into a star. I want to see her turn into a superstar as well. So it's amazing. Okay, here's a minute long interview on the Hawk Tua girl. Here we go.
I've been dropped out of school for like a year or two.
Okay, so this was like
But I don't quit my job. I've been dropped out of school for like a year or two.
Okay, so this was like
But I don't quit my job. I said peace.
So now is like you're gonna go to LA, you're gonna go to New York.
Oh yeah.
Do you think you see yourself like starting your own type of like show or podcast, or are you just gonna be like an internet personality?
I think we're gonna do like a show, and then we're just gonna be like on a bunch of podcasts and everything else in between.
Cool.
But-
So kind of just figuring out as you go.
Oh yeah, there's more to come. Don't worry. There's more to come.
Like, she has the whole team. It's so
Right.
crazy. It happened. The internet is insane. Your
Oh,
life
yeah.
changed overnight.
It really did,
Yeah.
for sure.
Are people coming out of the woodworks now? Like, what are your friends back home like? Are they treating you differently? Are they like being bitches about it, or are they?
They're
like,
really supportive.
oh,
like,
good.
I've had maybe one or two that have had some nasty comments about it, because the comments I've got from it, I don't even know these people, but I know they're like from my area.
Mhm.
But all the mamas and all my friends and everything else that know me personally, they've attacked that ass. Let me just tell you. It's just been, I can't even tell you.
So
just
everyone's
great.
loving it.
Oh yeah.
Where are you from? Like, where did you grow up? You don't
I
have to
grew
say
up
where,
in
but-
Belfast, Tennessee.
Okay.
I've lived there for 20 years, and that's just,
Are you
where
like
I'm
super
from.
country?
Oh yeah.
Okay.
Oh yeah.
I can tell by the voice.
Dude, I kind of like the country accent. The country accent's kind of cute. Oh yeah. Oh yeah. I like I kind of, I had a country phase in 2006. I remember this because there was this show. Some of you guys remember it. It's called Can You Duet? DUET. Can You Duet? It was like American Idol for country. I had a country phase in 2006, and I was getting all into country. And then I like found Eminem and I started like becoming a rapper. But yeah, I the country goes deep into my soul. So here's the video that Elon responded to yesterday that was just so cute. So here's a little girl talking about fixing up her Tesla, and we'll see what Elon's response is.
Hello, Mr. Musk. I am Molly from China. I have a question for you, car. When I draw a picture, sometimes will disappear like this. You see it? So, can you fix this? Thank you. Hello,
And then Elon responds, sure. I mean, come on, dude. It's so cute. And I said, Elon's the tech CEO we don't deserve. It's so cute. All right, I'm getting a call from one of our resident contributors, Steve. I don't think he knows I'm live, but I'll tell him I'm live right now. Steven Fiorillo, you are live with me on the Market Open.
So I just checked to see what Tesla was doing real quick, and wow.
Your covered calls are likely not doing that well.
Yeah, they're not doing that.
I mean, you can roll them to like 2026 and pick some crazy strike like 400 or something, and maybe,
I'm gonna have to figure something out.
Okay, so tell the audience what covered calls you have right now, because I'm sure other people are dealing with this situation as well.
I had 192.50s for July 5th, which I bought back and rolled out to September 20th at a 210 strike. And now I'm going to have to probably roll them to December or January 2025.
What strike are you thinking Tesla might not be at in January 2025?
It's not even about what it may not be at. It's just protecting my downside with risk mitigation. I mean, I'm probably just going to go out to like 235 or 240. And then if it blows earnings out and if the robo-taxi event is good, I'll probably have to buy them back again and roll them. I want to leave myself room. I don't want to take a number at like 325. I mean, I'm going to gradually staircase it.
You seem kind of upset about this.
I'm not upset. I just did not think Tesla was going to do what it is doing. That's
Okay,
all.
so let me ask you. Let me ask
can't
you.
predict things.
Let me ask you the better question here. Is this 15% move, $80 billion of market cap, justified in the past 48 hours?
I mean, people are willing to buy it. So obviously investors like the news.
Yeah, but
They think it's
don't. I
worth
mean,
it.
don't give me that answer. Give me an analyst answer. Like, do you think it deserves?
I'm not an analyst. That's the answer. People.
Steve, we're all
see
analysts.
value in it.
We're all analysts here. If we're buying our own stocks, if we're buying our own equities, you know.
I mean, look, it's one of those things. I think you need to really. It really depends what he says and how they do in Q2 and what the outlook is. I mean, right now it looks expensive based on its profitability versus the rest of the auto industry and the rest of big tech. No matter how you want to value it, today it looks expensive. But I mean, if they really do come out and say, listen, Optimus is real next year, we're going to start delivering to manufacturing plants. And they come out and say, we're good, we just need to work with government regulation on FSD. And robotaxi could be a thing the day after regulation is passed. I mean, look, this is something that could go to 350, 400. I don't think Dan Ives is crazy about that.
But that would be at $1 trillion market cap. Like, you think that's just easy to get to?
I'm not saying that it's easy to get to. I'm just saying that based on what the future profitability is, it could get there. Remember, every investment is the present value of all future cash flow.
I get that. But my point here, Steve, I'm asking a broader question that the deliveries were above expectations, which is great. The stock is it went from $600 billion market cap to $732 billion. We've seen this happen with Tesla many times. Is there any doubt that you have that this is happening way too quick? And although the narrative is
it could sell off tomorrow. That's why I'm going to roll my options now while the going's good. And if it retraces, I'll just buy them back because they'll lose a ton of value.
So
yes, it could easily sell off. But I don't know. I mean, who knows? This thing's been a rocket ship, but it's nowhere near where it used to be, and people were bullish at 350. So this could have a lot of legs.
Do you think people are taking profits from their winners, like NVIDIA and Google, and they're also dumping it into Tesla?
I don't know about Alphabet, but I wouldn't be surprised if people are taking profits from NVIDIA and you're going to see rotation out of chips. That wouldn't surprise me in the littlest bit.
Steve, it's at 230. It's at 229.99, dude. This is great. I mean, you have a big Tesla position, so you're up on the shares, even if your covered calls are getting hit, right?
I am not mad by any means. I'm just surprised. That's all. I'm very surprised. And that's why the option premiums are really big, because there's a lot of volatility. And this thing could be down or up 30% on the littlest thing, you know?
Jose put in the chat the July 25th premiums for 250 are giving you 740 a share. Their earnings are on July 23rd, so that's 3 days after earnings, which is not bad. 740 a share.
And it's not even so much about earnings; it's about what they say about the next couple of quarters.
Yeah, no, I agree. And now it's above 230. I think on the earnings call, I think no one gives a shit about Optimus right now, unless they put out some new video or something. I think everyone really thinks on 8/8 they're going to like put their foot in the ground and say robotaxis are coming, and the street's pivoting from caring about gross margins to caring about AI essentially. And
I mean, I think that the NVIDIA trade is crowded, and I think you're going to really need NVIDIA. If they don't look. There's more downside risk to NVIDIA at this point, because if they don't blow earnings out of the water, and I mean blow earnings out of the water, I don't know if they can keep the momentum up. And if people are going to trade, and then you're going to get a narrative that competition's coming, you had too many orders, people don't need as much, big companies are slowing down on CapEx. Like, there's more risk, in my opinion, to the downside on NVIDIA than Tesla right here, because Tesla's got a lot of things that they can deliver on, whereas NVIDIA all depends on what their customers are doing at this point. So who knows? I mean, look, maybe you could go to 160, 170, but they need a lot of orders to come through to do that.
Do you think this 9% move, it has to be institutions. There's no way this is all retail, right? I mean, like Barclays has to be advising clients to buy this shit right now. This can't just be you and me buying it.
Look, this really could be a sector rotation into the laggard, same way you get the dogs of the Dow. I mean, Tesla's been the laggard in the Mag 7. Okay, this could be a sector rotation into it. It could be taking profits from Broadcom and other chip names and trying to make more money on Tesla. Who knows? It could be a lot of things.
Palantir also broke out 2634 today as well.
Good.
Dude, okay, let me ask you one last question. I'll let you get out of here, Steve. Do you think a Palantir Tesla 2-stock portfolio can outperform over the next decade against the majority of portfolios?
Outperform what?
Outperform like okay, so let's frame the question like this. Palantir and Tesla together against any other 2 stocks together. Forget the S&P and the Nasdaq, but any other 2 stocks. Do you think these 2 have enough alpha? Palantir at 50 billion, Tesla at 700 billion market cap. Could they together outperform like an NVIDIA, Tesla, NVIDIA, Google, Broadcom,
Maybe.
NVIDIA, etc.?
I mean, look, anything's possible. I'm pretty bullish on Palantir. Look, anything's possible. If you're going to ask me if I think the combination of Palantir and Tesla is going to outperform an S&P 500 index fund, I would probably think over the next year or 2 that has a good amount of potential. Is it going to outperform Microsoft, Amazon combination? I have no clue.
Okay. Appreciate it, Steve. I'll talk to you later. Thank you for joining.
Yeah, call me later.
Call you later. Bye.
Bye.
All right, guys, we'll end it there. Shout out to David in the chat, $27 super chat. Thank you, David. Appreciate that. If you could own 3 stocks for the next 5 years, what would it be? He said his would be ASTS, TMDX, and IONQ. Also, are the actors Dermot Mulroney and Dylan McDermott the same person? I don't know who the hell those are, but let's end off with that. What 3 stocks would you want to own for the next 5 years? That's a nice question to end off on as I pull up the word of the day. So put your 3 stocks in the chat. That Palantir Tesla question has always been on my mind for a long time as a 2-stock portfolio combination. Could that outperform a majority of companies over the next decade? Maybe. Tesla right here up 10%, dude. It's at $230. This is just incredible, dude. Like, this is pretty damn incredible. This is pretty freaking incredible. There you go. Tesla up to fucking, I mean, like, dude, did anyone think Tesla would go up to 230 today? 230 is number, last time we got 230, hold on. Last time we got 230 was January 2024. And last time before that was October 2023. So we haven't got this in 6 months, basically. As you can see right there. Went from 230 in January to 138 in May to 231. 231. It's above 230. Oh my God, bro. Holy crap. Oh my God. Okay, let's see what we have in the chat. We have Rocket Lab, Palantir, Tesla, Palantir, NVIDIA, Tesla, Palantir, NVIDIA, Tesla, Palantir, Coinbase. That's actually not, I like the Coinbase angle there. Tesla, Hood, YMAX. I am starting to think Robinhood is a generational hold, to be honest. The more I think about it, the more I just want to have, because if Robinhood gets to $300 billion of assets and like, and close to like 50 million accounts right now, they're at like 24 million over the next decade. I think Robinhood is going to be potentially, it's just their business is so cyclical because when the market sucks, their trading volumes go down. But if you can withstand that, that might be a stock you want to hold for the long term. Hood, Palantir, Google, SoFi, PayPal, Nike. Okay, Victor's trolling. Victor's fucking trolling right there. MicroStrategy, IREN, Tesla, Palantir, Tesla, Palantir, SoFi, Airbus, Tesla, MicroStrategy, Palantir. Yeah, not bad names. Everyone has Palantir and Tesla in them, which I don't think you can go wrong, dude. I know we have bias because they're both ripping green right now. Palantir 2642. Let's fucking go. But still, Palantir and Tesla. I mean, yeah, these are the names. These are the big names that I think are going to define a portfolio over the next decade. Now, obviously, it's green. If it falls tomorrow, everyone's bias kind of changes. But I mean, I think in the long term, these are 2 companies that are probably primed to to matter in the world, I guess. And we'll see whatever happens to the stock after that. Now, here's the question on Tesla. Here's the last question we'll end out with. Do you think we maintain 230? Do you think we go higher? Do you think we take a breather? The RSI right now is at 63. So the RSI is definitely approaching, even on the daily, it's at 68. So on the weekly, RSI is at 78. One could argue it might take a little bit of a break right here at 231 because it's ran up 10%. But if it closes above 225, bro, if it closes above 225, I mean, talk about a hell of a day for Tesla. Even if it closes at 220, dude, I know it would suck to see it go down from 230 to 220, but if it closes above 220, incredible. And I think it would take a lot of work for this thing to go down to 220 now. It would take a decent amount of like sell side pressure, and the narrative is absolutely not on the side of getting this thing to go back down, at least right now. And then you got earnings coming up in a couple weeks, and I don't think anyone wants to be, short Tesla going into earnings or not have as much exposure as they wanted. Thank you, Ricardo, for becoming a channel member. Really appreciate that. Thank you for becoming a channel member. What if it closes at 250, dude? Could you imagine? Tesla covered call premiums on December 24th. Okay, this is actually the last thing we'll do, and then I gotta get into a meeting. So Tesla, let's look at the covered call premiums for this year. Let's go to the covered call premiums for this year. So if we go to December 19th, December 2024, December 20th. $300 call. Oh my God, dude. Oh my God. The market is willing to pay $15.40 per share for a $300 call by December 20th. So let's do some math. Let's do some math. So if you bought 100 shares, which is what you need for a covered call at 230, let's just say 230, that's $23,000. You could sell the $300 covered call. You would get $15.45. What's the bid in the ask? Yeah, you'd probably get $15.30. That'd be in the middle. $15.30. And so $15.30 divided by 23,000, you would make a 6.65% return selling that covered call. And then if the stock gets to 300 minus 230 divided by 230, you would make a 30% return on the shares. So you would make a 36% return if Tesla got to $300 based on that covered call. And if Tesla doesn't get to 300 by December, which, I mean, you could argue 300 would be a little bit much going into December, but maybe that happens. You get to keep your shares and you get a 6% premium, which basically means you make 1% a month on the shares because there's 6 months left in the year. 1%, 6% divided by 1%, 6% divided by 6 months, or 5 months left in the year. So basically make a little bit over 1% for the rest of the year. That's not horrible. Now, the problem is if Tesla runs above 300, which, dude, I mean, if you put a gun to my head, I don't think Tesla's 300 by December. I think that's a lot to ask, but if it happens, I wouldn't complain. I mean, that would be so epic to see Elon fucking take the stock from 130 to 300 in 5 months. Dude, like Gordon Johnson must he must be so upset right now. Like the Tesla bears would not be able to handle that. But I mean, if you bet on the side of innovation and you bet on a motherfucker that doesn't stop working, then maybe Elon actually pulls it off. Not bad at all. All right, let's do word of the day, and then I got to get out of here. Thank you, everybody, for being here today. Fun day. Word of the day. I'm definitely not going to say this correctly. This is weird. Feinschmecker.
Feinschmecker.
Damn, I got the E wrong on the mecker. Feinschmecker. A person who appreciates good food. A gourmet. The restaurant, popular among Feinschmeckers, offered an exquisite tasting menu. An impressive Feinschmecker. She could identify every ingredient in the elaborate dish. So I would say that if you like medium well steaks, you have the characteristics of a Feinschmecker. And if you like eating all that blood in medium rare, then I would not call you a Feinschmecker. All right. That's it for me. Thank you, everybody, for joining. Market close at 3:45. We'll be back. We'll see what goes on with Tesla. And we'll be here in about 4 or 5 hours. Sanjay says the Hawk Tua girl is a Feinschmecker. That is correct. Bye, everybody. Thank you for joining. I'll see you in a few hours. Bye, everyone.